You've got a 674 credit score, and you're picturing yourself in a brand new Cadillac. But then the big question hits you. Can I even get approved for this? This has low-key been stressing you out. But first of all, let me give you some context that will completely change how you view this whole situation. In this video, I'm going to break down what the dealer actually sees when they pull your credit, and I'll show you your real approval odds for both new and used Cadillacs. And what if I told you the answer isn't a simple yes or no? First, let's get one thing straight about where a 674 credit score actually puts you. While some might call it good in the world of auto lending, it's more accurately defined as prime or even fair. But here's the most important part. You're not in subprime territory. You're solidly in the prime borrower category, which is where most auto loan approvals happen. The average credit score for a used car loan is right around 684, and for a new car, it's about 748, so you're right in the mix, especially for a pre-owned Cadillac. However, and this is a big however, when we're talking about a luxury brand like Cadillac, lenders keep their best deals. I'm talking 0% or super low financing for super prime buyers. Those are the people with scores over 781. So while your 674 score gets you into the game, it doesn't mean you're getting the VIP treatment. You can absolutely get a loan, but the terms are going to look very different from someone who walks in with an 800 score. Now you might be asking, what does the dealer see besides that number? Your 674 score is just the headline. They're about to read the entire article. The first thing they're going to pull up is your debt to income, or DTI ratio. This tells them how much of your monthly income is already spoken for by other debts. The magic number they want to see is 36% or lower. They're also looking at your payment to income ratio, or PTI. This is the one that really matters for the car itself. It's how much of your income will be eaten up by the car payment. If you can keep that number under 20%, you're in a much better position. Finally, they look at your income stability and your credit history. Even a decent score can have some old mistakes on it, like late payments, and they will see that. So they aren't just approving a score. They're approving your entire financial picture. So what exactly is the answer then? Can you buy the Cadillac? Yes. But here's the catch. With a 674 score, you have to expect a higher interest rate. For a new car, the average rate for someone in your credit tier is around 6.70%, and for a used car, it jumps to about 9.6%. That difference in interest could literally cost you thousands of dollars over the life of your loan. But here's the one tool that gives you all the power back: the down payment. But that being said, my personal recommendation would be to put down as much as you can. A serious down payment, like 20% or more, completely changes the deal. It lowers the lender's risk, it shows you're serious, and it can be the single factor that gets you a much better interest rate. A big down payment makes a lender forget all about a score that's just okay. Okay, so what's the game plan to walk into that dealership and win? First, and I cannot stress this enough, do not let the dealer be the first to run your credit. My personal recommendation would be to go to your own bank or a local credit union and get pre-approved before you ever start shopping. Credit unions are gold for this because they often have better rates and are more flexible. That pre-approval is your weapon. The dealership now has to beat that number. Second, get your paperwork together. Bring your last few pay stubs, a utility bill for proof of residence, and bank statements. It shows you're not a rookie. You're organized, you're serious, and you can back up every number you give them. Third, know your entire budget, not just the monthly payment. For you, this means factoring in the higher insurance costs for a luxury car and setting money aside for maintenance. A buyer who has done their homework is a buyer they can't push around. Now let's talk about the car itself. Your 674 score gives you a high chance of getting approved for either a new or used model, but the path of least resistance is almost always with a used Cadillac. Lenders are just more flexible with used cars, and since the loan amount is smaller, they see you as less of a risk. A new car might have a lower advertised interest rate, but you're financing a much bigger number. A used car might have a slightly higher rate, but you're borrowing way less money, and you're not going to be upside down the second you drive off the lot. For a 674 credit score, the absolute sweet spot is a 2 or 3 year old certified pre-owned Cadillac. You get the luxury, you get the warranty, and you get much, much better financing odds. So, the dream of owning a Cadillac with a 674 credit score is absolutely realistic, but it demands a strategy. You can't just show up and cross your fingers. It's all about getting pre-approved, having a strong down payment, and picking the right car for your exact financial situation. You're in a good spot. Now you just have to play your cards right. Hope you got a ton of value from this video. If this breakdown helped you, do me a favor and smash that like button and subscribe for more no-nonsense car buying advice. And drop a comment below. Are you going for a new or used Cadillac? Let's talk about it. Thanks for watching, and I'll see you next time.